This episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now here on Market Talk as we take a look at what happened in Thursday's trade action and discuss what is going on in the market trade. Our good friend Bryan Doherty, Senior Market Advisor at Total Farm Marketing. He is our guest analyst here today on the show. Bryan, good to catch up with you again, sir. Hope you're having a good week.
We are, maybe a little better than where the corn and bean markets are today or ending the day, and maybe the equities as well. But some very interesting fireworks early in the week, and then kind of give it all back late in the week. So on corn, as an example, had our weakest close since October 22nd on December corn futures, whereas 2 days ago we had our highest close since mid-October. So you're still seeing that range-bound trade, Jesse, but you're seeing the traders sell the top. Buyers will see if they come in and buy this dip. The risk the corn market has is that the export market doesn't really pick up some steam soon, is that moving averages, the more the market goes sideways, the 50-day, the 100-day, these start to get closer and closer to the market. So if they don't hold a support, trade often will use those as an area to say, hey, if they're not holding, we want to exit our longs. So that's a risk the corn market might face.
Well, and you bring up the range-bound trade in corn, and I would agree. I mean, maybe pushing the highs up a little bit and lows down a little bit, but overall staying really, really range-bound. And those weekly export sales on Thursday morning, maybe a little better for corn, but still not great. And that's something that is starting to concern me a little bit, Bryan.
It's concerning you, and it's going to concern the marketplace at some point. We do expect that when prices are high and users buy as needed, and particularly in front of harvest, anticipating some sell-off in price, and maybe prices still move down, but we're not seeing this robust sales activity that we really need to see in corn. So the risk is the USDA will take a look at how it pans out, and 15 million bushels today. I mean, that's not anything. We need to see some big numbers. That's not a big number. Soybeans, though, I'd make the argument that at 30 million plus, that's solid. Soybeans, year to date sales on soybeans, 1.186 a billion bushels, and the same time last year we're 1.176. So we're running at a pace faster than last year. And on Monday, you saw export inspections were very robust despite our concerns with the Mississippi. So the world's taking our beans; they're just not buying our corn right now.
Yeah, and I find that interesting. I noticed China canceled a cargo of corn last week on that report, but then we're hearing all these reports of cargoes of beans going to China, and obviously they're our biggest customer or have been. I'm just interested to see what happens here, and wondering maybe are the Chinese not stepping in because we're so range bound right now? I wonder if they're waiting to see what could happen. I don't know. I'm just interesting thoughts there, Bryan.
Well, it could be they're trying to stretch it until something more definitively is in place in the southern hemisphere, to see what that crop looks like or weather looks like. But still, that's a long way off. So, we've worried about demand because of the economic conditions in China have been on a downturn for some time, but still, it doesn't quite add up. My guess is they've just been buying as needed, and then pretty soon they come in a bigger way because the need will be there. But so I'm getting into the needle. If over the halfway mark is concerned, it's probably one tick over the halfway mark right now.
Yeah, very true. Soybeans on Thursday, probably the weakest of the grains. I know bean oil remains at the highs or near the highs. Bean meal was a little bit under pressure, though. That felt like maybe the reason. It felt like soybeans followed meal on the day Thursday, possibly.
Yeah, it did. Meal has been very volatile lately as it stretches itself. You look at that contract here, a couple of days of there as well, 440. So it's near the contract high that was established back in September. So meal has really had some good strength. It's been consistently strong a year, but it's been volatile the last couple of sessions, especially today, kind of rough. And the traders are spreading the oil, selling the meal. Good crush pace. I got to think that the bean market is well supported. We're actually seeing the futures market look somewhat impressive, not necessarily today, but to kind of break out to the top side here and through
Mhm.
the upper moving averages. And bean meal's been a part of that. But off today, soybean oil, what's going to get interesting here is as we look toward the shortage of biodiesel, if that doesn't get resolved, how the market will, maybe from even a speculative interest, continue to keep the oil markets, the soybean oil market alive, anticipating growing demand and need for these beans that'll be crushed through the newer plants, biodiesel plants in the year ahead to try and create that void of diesel fuel that's missing from the marketplace.
Well, on both corn and beans, Brian, I think we can almost put a bow on harvest season here across the country. We're nearing the tail end here. I mean, I would think the next couple of days, next week, we would be putting the bow on that. So, anything changed in your marketing thoughts or on the cash side, even with farmers here as they wrap things up and maybe look to throw some stuff in the bin or put the combine away. Anything changed since the last time we talked with what your thoughts are there?
It's a good question. I have worried myself the last couple of days that the tone, we're kind of at a crossroads. The tone was looking supportive, all of a sudden may change. It flips back. If you don't have supportive news out of the because of the war, which it kind of took the premium right back. And then I worry about the dollar and the interest rates again. So we continue to kind of keep building these resistance levels. With that being said, though, Jesse, not much. The big picture continues to point toward tight world supplies, need for big crops, need for good weather. You're going to get a lot of ebb and flow, but we're holding at high levels. What does concern me, probably more than maybe it should, is just conversations with wasn't a many, but a few farmers this last couple of weeks that have really got nothing sold or very little sold. And I'm like, to me, that's you got some pretty good prices. You probably didn't feel so good toward the end of June and July. And I don't know if we're in a position to repeat what we saw last April and May. So think about, monitoring basis well, looking at price and moving some inventory, and hope you're wrong and sell some more at a higher price.
Yeah, and obviously too, if farmers want to look at some reownership, I mean, there's plenty of strategies out there. We've talked about that, like different call spreads, etc. I mean, they have a chance to get back into this market still if they want to, Brian.
Oh, they sure can. And the encouragement would be if you need to brush off the books and that a little bit, do so. Talk to people who understand those things and kind of set you in the right track. This is a situation where there's really no wrong answers here. So position, strategy, exercise tools that are at your disposal. Your profession is produce a product, you produce it. You're also a professional in that you need to market it and sell it. So you got to get on this marketing hat, risk management hat. So look forward to kind of embracing the volatility and opportunity, but you can do so more than just with one cash tool.
Brian, this wheat market was relatively mixed on Thursday. It's been volatile this week. We alluded to that, the issues with the Russia Ukraine grain deal and the war, and Russia's in, then Russia's out, then Russia's back in. I mean, it's a lot of concern there, but I'm surprised with wheat on Thursday. Felt like maybe we hit the bottom of the ranges and found some buying support.
We did, and we jumped down, filled the gap that I left on Sunday night. And so technically I'd like to see that happen because then it's not hanging there waiting for the market to go down and reach toward it. So we did fill the gap. We saw buyers come in. I think if you step back and you kind of look again, and we've kind of stressed this over and over, the drought monitor map is scary. Um, Planting pace for winter wheat ahead of schedule, emergence below or ahead of average and below. That tells you you're planting in dry. So there's a lot of farmers hoping that they get not only get rain, but then they get more rain. You don't want this wheat to just kind of sprout and then dry out or have a shallow root system. And so the winter wheat crop rated worse than 20 years. Um, there's not a lot of reason that, in my view, that I would be negative on price. Now I know it's still a high price, so we have to recognize that. But fundamentally, we need to, more than the forecast for crops worldwide, we need to see them and get them into the pipeline.
Well, and I know as well, overall, commodity wide, the dollar is going to be a headwind here if it continues to go higher. And the interest rate talk, we knew the Fed was going to raise rates. Now, talk that they might keep going. I know you and I've touched on this before. That's a tenuous situation right now, Brian.
Well, very much so, and for some of us, it is what it is because we thought that they were so slow to react and to move, and whatever the rationale behind that was, because it sure seemed like all arrows were pointing toward shortages and supply problems and labor issues, and now they're trying to play catch up. And this week, the market's really disappointed. It was, I don't know why, but the wording seemed to be dovish into this release, and thoughts were, hey, we're on track to maybe see half point, maybe quarter next time, and kind of ease this down. And didn't happen. 3 quarters was sort of some hawkish language, excuse me, by by some of the Fed chairs, and yeah, kind of the same old here. Just can't get this inflation under control at this point.
Bryan Doherty, Senior Market Advisor at Total Farm Marketing, is our guest today here on the show. Brian, I want to flip over to livestock trade. Beef, we saw a really dismal export sales number on Thursday. Felt like maybe some consolidation in the cattle market. Wasn't a bad day in futures, but I'm looking at that export sales number, and it just was rough in my thought view there, Brian.
It was, and we look at those kind of numbers on a 1 week event, and maybe it's a one off because we've had so many good numbers, and it just ebb and flows. So we'll just have to see if we get a sort of a pattern of that. Um, I don't think you are. I think you know you ship it, you eat it, it's gone. You got to keep the pipeline moving. It's not like you're going to store lots and lots and lots of red meat. The the supply numbers, we mentioned this many times before, that if you look at the cattle on feed reports, it seemed like because of the drought conditions, lack of winter wheat conditions, that we've been pulling ahead on feed numbers. And I think that's catching up to the market. We saw how quickly the market rebounded $6 here recently, then drop back a couple dollars here. I think the market is well supported big picture. There again, still at a high price. So maybe we're defending with some put options, or maybe a fence strategy where you buy a put, sell a call. Um, but fundamentally, gosh, it's just hard to be negative. It's just hard to be negative. We've been kind of entrenched in the bull mindset, and still are there.
Very true. Hogs, I know we've had a good run here, and the export number looked pretty robust to me, but a little bit of consolidation in the hog market even on the day Thursday. Any thoughts there, Brian?
Um, well, something's got to give. The index is too high to the board, and I know it's only November 3rd, but we can see that disparity of $10 or more is likely to come together, and the board's underneath the index. So I think the market's being cautious, the board's being cautious, because when you are at this time of year, the general perception is, look, retailers are stocking turkeys, turkey. But really, the reality is the retailers are starting to buy pork sooner than later for Christmas and beyond. So I want to be friendly, the board, because I think the cash market isn't going to come down much. And it's not like we have sales or weekly slaughter numbers that are just overwhelmingly large. The herd, in theory, is 1% smaller than a year ago. Um, Sticking with a bias that the board's probably undervalued here in the front months. Now, we can argue if you get out to June, you're trading at 104. That's a different story. That might not have to go a lot higher. But 83 in December, that's too low.
Well, definitely some things we'll think about there and keep our eyes on. Brian, how about the dairy market as we take a look at that here getting into the month of November? Any thoughts there?
It's had a rough go, but a pretty good day going so far. 14 to 55 higher I look at it right now. Stochastics gave a crossover buy signal, oversold. Oceanic prices still problematic, and that's reflective of China and demand. And there was some scuttlebutt early in the week that China may be thinking of lifting a lot of COVID restrictions. We haven't seen anything confirming that. At least I haven't. But the dairy market really kind of went on sale, and um, just I'm don't know if the dairy market's a good tipping point to kind of get a hold on the economy. I'm just sharing one story of one cheese store that monitors traffic and purchases per customer, and it's just they're just not as strong as they've been, and historically. And so, is the consumer just with inflation and other expenses pulling back a little bit? Looks like that may be the case, but I have no evidence that this herd is about ready to skyrocket or rebound. Um, I think milk's probably a little bit undervalued right now.
Well, Brian, good stuff as always. Before we run out of time and wrap it up, I will give you the floor, sir. Anything else you want to mention or reiterate today?
I think what I just want to reiterate here in corn is that without sort of that swing vote of exports really pushing the market, that if you're filling your bins up, be careful not to shut the doors and forget about it. You still might want to use some paper tools to manage it. Specifically, I like strategies out to March for the next almost 120 days to put a floor in. Then I would be looking at buying some kind of a put option, and then if you're willing to take the risk and cap yourself and meet margin calls, then I would sell a call option above the market to help pay for that.
Well, Brian, if folks want a little advice with their marketing plan, I know they can reach out to you there at Total Farm Marketing. A couple different ways. What's the best way to get a hold of you, Brian?
The best way to get a hold of me is to call me 800-334-9779. I work a lot of hours, make myself available. Second best way is to shoot me an email, Bryan with a Y, at totalfarmmarketing.com. And then we've got a great website, totalfarmmarketing.com. Take a look, lots of resources there and ways to reach out.
Brian, always a pleasure, sir. Thanks for the time. Have a great weekend. We'll talk to you next week.
Jesse, thank you. My pleasure, and thank you. We really appreciate the opportunity and hope everybody keeps it safe.
Bryan Doherty with Total Farm Marketing, our guest today here on the show. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.